to another big exclusive that we've lined up for you after the big changes that have been announced by the Finance Minister and the GST Council on GST. We have Britannia. The stock did extremely well in yesterday's trading session. Varun, the MD, joins us now. We can see him on the screen. Three major talking points that we have with him. Impact of the GST rate cuts on overall business for him, outlook on commodity and prices in the second quarter. More importantly, growth in the non-biscuit part, dairy and cheese, due to these cuts coming by as well. Mr. Berry, always a pleasure speaking with you. And I think you and your ilk are having a good day, literally, on account of the treat that the Finance Minister and the GST Council have given you. But for a sector which is as price sensitive as yours, 60% coming in from price point packs at 5 and 10, etc. If you could give us a sense on how much could the incremental volume growth be because of these cuts? And earlier you had spoken about a delta of 6 to 8% between price and volume. How does that narrow in the coming quarters for you?
So I think the volume growths are going to be a lot more than what we've seen in the last, let's say, 3 or 4 months. So what usually happens is that if you take a price increase, that sort of delta becomes much larger in terms of volume. So now, if we are going to increase, let's say, a 10% volume, I would say that volume and revenue growths would be, sort of neck to neck in the coming months.
So does that mean we see higher single-digit volume growth in the coming months because of this, as against the low single digits that we've been seeing over the last 3 to 4 months?
Absolutely. Absolutely.
And do they touch double digits as well at some point?
Well, we always are hopeful that it should get to double digits, and I'm sure they will. It's a big initiative, Mangalam, and I do think that this should create the demand scenario that the Honorable Prime Minister has envisaged for the country.
Right, Mr. Berry, good afternoon. So obviously we're hoping for better volumes coming in for the company going forward. Let's just talk about any disruptions that we should be watching out for, maybe due to the stock that is there at the dealers, anything that we should watch out for in the near term?
Yeah, no, so we'll have to figure it out. See, this has come just a couple of days ago. We are in the process of planning how we take this forward. So if you were to think about it, you've got stocks in the factory, you've got stocks in the warehouses, you've got distributor stocks, then you've got laminates which are there, which are lying in every factory, which are packaging material, etc. So all those we've got to figure out. We usually keep a very tight leash on all our stocks. But we'll have to plan out all of these and figure out how we can get to market as quickly as possible with the increased grammages or with the decreased prices.
The increased grammages and the impact of that we're likely to see immediately, because the second quarter obviously is done with. These changes come into effect from September 22nd. So I suppose the second half of this year is where we should expect higher volume growth?
Yes, absolutely.
By how much?
It will take a little bit of time, Mangalam, to get these out in the market. And we will obviously make sure that we try to do it as quickly as possible. But, the grammage changes usually take a little bit more time than price decreases. So part of the portfolio will be done immediately, and a part of the portfolio might take a month and a half to get it to the consumers.
Right. Ex of GST, if you could give us a sense on the current consumption environment, what the general understanding is that the GST is boosting an already upward moving or improving consumer sentiment. Would you be able to, concur with that? And on the other side, we have these heavy rains, the kind of weather impact that has happened, that is actually putting a bit of a lid on what could have been better growth. How has sentiment been right now? And how much do you think will these cuts boost sentiment at large?
No, so that's a great question, because the sentiment for the year, for this financial year, started off really well. And then came this entire period of heavy rains, etc., which I think is temporary, because a good rainfall also impacts the economy. And I'm sure that as we go forward, it's only going to impact the economy positively. So leaving out the temporary stagnation in the last couple of months due to heavy rainfall, I do think that overall impact is going to be very, very positive from a consumption standpoint.
Okay, positive impact from the consumption standpoint. Mr. Berry, could you give us an indication just in terms of overall the commodity pricing? How has that been in Q2 as well? Any significant changes or what are we watching out there?
It's within a band. It's not like what we've seen in the last 2 or 3 years where there was significant inflation. We are now operating within a band, which is good. It's always good to operate, between 3 to 5% kind of a band because that's manageable for most companies. And I do think that that's going to continue. I don't think I see any major inflation coming, in our way as we move forward.
Right, but you've taken some of the price hikes already. Now volume improvements will happen. The GST rate rationalization has happened. Raw materials are in a bit of a band. First quarter, your gross margins were lower by 300 basis points. Have we seen the worst of them? Second quarter onwards, do we see improvement in gross margins and subsequently EBITDA margins?
Mangalam, it's very early to comment on that. I do think that it's only going to be positive. But I do think that, passing on everything that we have to the consumer and taking in mind the inverted, taxes that we have, plus some of the state benefits that, will become much lower in our factories, the state GST benefits that we have. So keeping all that in mind, we'll have to do our numbers and then give you what the overall impact is going to be. But yes, I think it's going to be a very positive impact on consumption and probably a positive impact on the trajectory of most FMCG companies.
Right, sir. Also, just in terms of, let's talk about dairy and cheese as well, right? Why leave them out? Because they have seen a reduction coming in. So overall, what are we expecting and what are you expecting in terms of synergies here because of this cut? Anything in terms of increase, and how will this price cut also be passed on? Will it be similar that grammage increase or price cuts?
Well, in dairy, it's mostly going to be price changes, straight price changes. And that can be done very, very quickly. And I do think that that's also going to have a very positive impact because, cheese is not such a well-penetrated category. It's still less than 30% penetration. And the consumption is also not as often as other products are. And a price correction will certainly, give it a boost from a consumption standpoint, and that's what we are hoping for.
All right, so dairy does well, which was anyway doing well for you on a very small base. You have had the capex, etc., out there as well. In terms of the distribution, you had in the first quarter said that you are looking at internal restructuring of your distribution, and as a result of which there were some market share losses. Has that ironed out right now? How is the second quarter and the subsequent quarters looking when it comes to that?
No, we didn't see any market share losses, but yes, we are in the process of, getting to our route to market 2.0, which is, making sure that we create more bandwidth in our sales system to be able to handle more categories and more SKUs. And that's going really well. We are partnering with Bain on that, and we are about midway. And I think by the end of the year, we should have completed that entire restructuring on distribution.
Right. Market share losses, I meant in particular in the eastern region and not at the overall level because of this internal distribution. But, since we have you with us, you're a champion for the industry. You speak for the industry as well. The government has given an income tax rate cut in the budget. Thereafter, the RBI has followed it up with a lot of interest rate cuts as well that have come by. Now there is this GST rationalization. Despite that, even if you expect all the other FMCG companies' commentaries post this GST, they believe that the increase in volumes could not be more than, say, 3 to 5%, or in some cases, about 600 basis points. What else does the industry have to do, or what else do others have to do for the industry to get back to its glory days?
I think we are on our path to get back to the glory days. The government and the Honorable Prime Minister has done exactly what was necessary to give this industry the boost. And I'm 100% sure that in the next 6 months, we are going to see the fruit of all that's been done, in the last 6 to 8 months, and especially this GST change. I think it's a big initiative, and it's going to give us big results.
Mr. Bere, just a quick one in terms of, are there any challenges that you're facing, anything more that you require from the government? And does this, 5% GST and all those fillip that are given by the government right now give you a level playing field on the unorganized player competition side as well?
Well, I would say the only other thing that is required at this point in time, I think, is the entire inverted tax that we have, the input taxes. Obviously, some of the input taxes have been rationalized as well. We still haven't done our numbers. If there's a negative impact of that, if we can be, if that can be looked at, would be one. Second, we've made big investments in our plants, right? We've been investing in a lot of states, and the states have been really kind to give us GST incentives. Now, with the GST rate going to 5% and the state GST now getting to 2.5%, we would request the state governments to give us a longer time to utilize the incentives that have been given to us, because we will not be able to consume them in the time that has been given at the higher 18% rate. So those are the things, those are the two things that we would request the government to look at. Otherwise, I think we are in a great place.
Got that. Wonderful. Varun, thank you so much for joining in and giving us your outlook on business, the impact that it would have on consumption because of the GST rate rationalization, and some of the queries that you had with regards to inverted duty structure as well. What I'll do is actually take the liberty to invite you once again at 4:30 today, if at all you have the time, because we are having a mega CNBC-TV18 GST town hall where we are speaking with the GST officials, the CBIC chairperson, and all queries like, you've just put would be put forth to them as well. In case you can't join us, we'll obviously take this query for them as well. Take a short break. On the other side, we will get you more on the markets and stock-specific action. Stay with us.